So you found your dream home. Congratulations! You've probably worked out your mortgage payment, but homeownership comes with a few extra costs that can catch new buyers off guard, particularly since no one really talks about them. Kind of like that unwanted hair growth during pregnancy. True story, but I digress. The kind of surprises that we're talking about today shows up on your doorstep in the form of unexpected repair bills, rising utility costs. I mean, think of owning a home like planning a vacation. Flights and hotels are just the beginning. There's also food, activities, and those little unexpected extras that can add up quickly and make your vacation uncomfortable if you're not prepared. Beyond your mortgage, you'll need to budget for things like insurance, maintenance, utilities, or that annual tax bill that could make you choke on your coffee. But don't worry, I got you. Today we're walking through the real cost of homeownership so that you can plan ahead and enjoy your home with confidence. Hi, I'm Taya Mower with Mower Group Realty, where we help buyers and sellers make smart moves in real estate. Trusted counsel requires honest conversations, and sometimes those include talks about hidden costs of homeownership. In this video, we're going beyond the list price and mortgage payments to talk about the top 5 pesky little extra costs that sometimes no one sees coming. I'll also share some real life story and give you tips on how to keep those costs under control. So let's dive in. Number 1, property taxes and homeowners insurance. I call this the set it and forget it trap. It's easy to assume that taxes and insurance will stay the same year after year, especially if they're bundled into your mortgage payment. However, both can change, sometimes significantly. For example, if you're buying a new construction home, the initial property tax estimate may be based on the land value alone, meaning that once the county assesses the finished home, that price will adjust, and it will adjust upward a lot. This reassessment can drastically impact affordability, so it's important to plan ahead. Most lenders in our area estimate future property taxes at around 1.25% of the purchase price annually. Additionally, in Oregon, omitted property taxes can be applied retroactively if the county determines that a home was previously undertaxed. Insurance costs are another factor. Rising premiums due to wildfires, hurricanes, and other disasters can impact affordability as well. So what can you do? Research how property taxes are calculated and check for omitted tax liabilities before purchasing. If you already own a home, understand that many assessor questionnaires and interior inspections are optional. So do your homework before volunteering information that could increase your tax burden. If you receive a property tax reassessment that seems unfair, did you know that you can challenge it using comprehensive data? Unfortunately, strong words and feelings alone won't do the trick here. And for homeowners insurance, shop around, bundle policies, and take steps to improve home safety for potential discounts. Just ensure that your coverage matches your home's replacement value. In fact, this should be reviewed annually, particularly when we are seeing an increase in home values. Number 2, home maintenance, or what I call budgeting for the unexpected. Every home requires maintenance, and while newly updated homes may seem low maintenance, hidden issues can still arise. So how can you stay ahead? Get a thorough home inspection by a certified, professional, and experienced inspector in your area. And no, your contractor uncle won't cut the mustard, okay? Then consider specialty inspections like sewer scopes, radon tests, and siding inspections. You can review permits and insurance claim histories or clue reports to uncover past repairs or unresolved issues. Plan for routine maintenance costs. Experts actually say that you should set aside 1 to 3% of your home's value annually for just this very thing. Number 3, utilities, your big monthly surprise. Are you moving to a bigger or larger property? Well, then expect bigger bills. I learned this firsthand when my family moved from a small starter home to a multi-generational home that was 3 times larger with a bigger yard. I knew our costs would be higher, But our summer water bill, let's just say, our garden's tomatoes were worth their weight in gold that year. So how can you prepare? Request 12 months of utility bills from the seller or check with local utility companies. In some areas, sellers must provide an energy performance score report. Review your EPS report carefully, and then take advantage of free home energy audits and consider efficiency upgrades like insulation and smart thermostats. Remember though, usage varies by owner, and thoughtful upgrades can help. Number 4. HOA fees. An HOA is comprised of more than just rules. My friend Emily bought a townhome with what seemed like reasonable HOA fees, but then in less than a year, the HOA announced a special assessment for roof repairs, costing her an unexpected $3,000. Ouch! Longtime residents, they knew about it, but Emily didn't, because like many buyers, she just skimmed through the HOA documents, focused solely on pet policies for her cat Phoebe, driveway parking, and rental rules. The financials and meeting minutes were completely overlooked, and that's where the real treasures and skeletons hide. So how can you avoid these surprises? Pro tip, actually read the homeowners documents. I know it's boring, but you'll be able to spot upcoming assessments or financial troubles from a mile away. If you're unsure of what to look for, there are third-party companies like CIDA which can help you. You can also enlist the services of an attorney to look at the documents and find those red flags. Talk to your neighbors. Not only do you want to know who's living there, but those particularly on the HOA board will have inside knowledge that probably a lot of the HOA documents won't even show you. And of course, you can get the bead on some neighborhood gossip ahead of time. But don't worry, we're going to cover HOA deep dives in another video, so make sure you stay tuned. Last but not least, number 5, big ticket repairs. The when, not if, costs like roof replacements, HVACs, and water heaters. Those expenses are going to come up, so knowing the age and lifespan of these big ticket items can save you from a nasty financial surprise. In fact, a close friend of mine bought a home with a 20-year-old furnace, crossing her fingers that it had a few good years left. Well, spoiler alert, it did not. And of course it died in the middle of winter. She didn't have the funds to replace the whole thing, which turned her cozy little dream home into an accidental ice hotel. Luckily though, she had an HVAC tech in her back pocket who helped her out. But let's be real, not everyone has a knight in shining tool belt ready to rescue them. I mean, have you ever had Prince Charming swoop in to cover your 5-figure home repair? Yeah, no, me neither. So how can you be prepared? Ask the seller about the age of all major systems and verify that information with your inspector or a contractor. If a repair or replacement is likely in the next 5 years, get estimates early so that you're not caught off guard. Consider securing a HELOC or a home equity line of credit before you need it. After all, you don't pay interest until you actually use it. A home warranty, now that might cover some of the costs, but an emergency fund will always be your best safety net because let's face it, furnaces don't care about your budget. They just stop working when you need them the most. So, long story long, smart home ownership starts with preparation. At the end of the day, the best way to avoid turning your dream home into a financial nightmare is to do your research. Hire the right professionals, trust your instincts, and stay within your means. And if you ever need a reminder of what not to do, just watch Tom Hanks in The Money Pit. Oh, and if you haven't seen The Money Pit with Tom Hanks and Shelley Long, do yourself a favor. Not only is it hilarious, but it's a great reminder of why preparation is key. Now, understanding these unexpected costs up front mean that you can make informed decisions and enjoy your home stress-free. Remember, you don't have to figure out all of this alone. If you have questions about budgeting for your home ownership or need expert guidance, reach out to us at Mower Group Realty. You can find our contact information and some helpful resources in the description below. Got a home ownership cost story or tip? Well, please Drop it in the comments. We'd love to hear from you, and that way we can all learn together. If you found this helpful, don't forget to like and subscribe for more real estate tips. After all, your home should be a place of joy, not financial surprises. It's not just about finding the perfect house. It's about making it your perfect home. See you in the next video.